for most of this year, there's been a lot of complacency in the markets about the U.S. election, with traders generally pricing in expectations that Hillary Clinton will win the election. The Democrats will hang on to the White House, and that political trends will essentially continue as usual. However, there's been a real resurgence in support for Donald Trump of late that calls that into question. And it's important for us to remember that back in June, we had the markets had fully priced in a win by the Remain side in the Brexit vote. Markets were caught completely 180 degrees dead wrong, totally flat-footed, and we had a huge amount of volatility ensue from that as markets had to scramble and traders had to scramble to get back on side to reflect the new reality. And so there's been an underlying undercurrent of risk underneath the U.S. markets for quite some time that traders in the U.S. could also be caught off guard by a surprise result in the U.S. election. We're starting to see some movement in some markets that are sensitive to the politics in the election, and that suggests that with Donald Trump picking up in the polls over the last week, that the markets may be starting to reflect that as well, even though they may not fully reflect it in time for the actual vote. But the U.S. election is looking a lot closer than it did before, and the possibility of a Trump victory has increased. Some markets are starting to reflect that. We'll show first the polls, because it's quite interesting here. And I looked most recently at Trump's polls over the last couple of months or so. He did really well after the conventions. He had been doing quite well into the end of September, and then he started to drop off, first after the first debate, and then after some allegations came out against him. In the last week or so, look at this. Momentum's really started to go his way again. It's really started to pick up, and Hillary Clinton has started to fall off. There's a couple of factors, a number of factors that people have suggested. First of all, they think Republicans have coalesced behind Trump. Certainly the new allegations or investigation of the FBI into the Clintons' emails and some of their associates has weighed on her support. Obamacare premiums have been going out to people, and increases have been huge, and that's impacted support for the Democrats as well. And of course, there's this issue of is there a hidden vote out there for Trump? People who don't want to admit to pollsters that they're actually planning to vote for Trump. So that's another thing that's been driving this. And it's interesting here as I move up here and I look at this ABC Washington Post tracking, which shows Clinton with a 1% lead. A couple of days ago it was 4%. A week ago it was 10-12%. So there's been a real shift in momentum, and we're starting to see that show up in the markets as well. I note this upturn here in the polls, and take a look at this. We've had this upturn here in gold over the last 2 weeks. Gold is the fear metal. When you have instability, when you have uncertainty, people look to gold as a defensive haven. As Donald Trump has started to, and for most of this year there was no relationship. It'd been all over the place. But here, when Donald Trump started to come off, gold actually preceded that. But look at this now. This rebound in gold has led a rebound in polling for Donald Trump, and momentum has been picking up. Some people have been quietly taking their money, parking it in gold. The trade that's been most sensitive to Donald Trump has been the U.S. dollar relative to the Mexican peso. With the dollar as the base currency, it's the U.S. dollar that's going up and down relative to the peso, which means this is also tracking Donald Trump in the polls, because when this goes up, it means the peso is going down. Donald Trump's been very antagonistic towards Mexico, talking about building a wall, ripping up NAFTA, deporting Mexicans, and withholding remittances and the whole things. He's been very antagonistic. So a Trump win would be seen as a negative for Mexico. So what have we seen through late September and October? The peso recovered as Donald Trump's campaign struggled. However, we've seen this bounce off the 200-day moving average. It started to pick up. RSI back above 50, also tracking an upturn in momentum for Donald Trump. So those are two markets that are starting to price it in. We'll also take a look here at U.S. indices, which is one of the markets that I had felt had really not been pricing in a Trump win. It's been going up through much of the year as Trump was cleaning up in the primary. So look at this. We had a head and shoulders top in the summer. It started to peak. We've got a descending triangle here. We've got distribution. It's fully priced in a Clinton victory up at all-time highs, and things have been starting to come off. So slowly but surely, it looks as though even the stock market is starting to come around to the idea of a Trump win. However, levels we'd need to see. We'd want to be seeing the U.S. the Dow taking out 18,000 or even 17,900. S&P 500, we'd be looking for it to take out 2,100, and the Nasdaq, perhaps say 4750. If we saw those levels start to crumble, then that would be a suggestion that the market's starting to come around to the idea of a Trump win. Look at how this is rolling over here on the S&P 500. Broke the 50-day moving average, tracking below it. Clear distribution. We're seeing markets rally in the morning, drop in the afternoon. What does that mean? It means that people are feeding paper into the market over the course of the trading days. So and look at this. RSI broke 50, so it became resistance, diving back under it again. Momentum's turning downward. This is suggesting that that people are starting to recognize that Donald Trump could win. The election could be really close. The election could be contested and drag on for weeks if it's really close, and that because of all of this, there's more political uncertainty emerging in the United States than we've seen for some time. And because of that, stock markets are vulnerable. The Mexican Peso is vulnerable. We're starting to see gold pick up, and we're actually even also starting to see the U.S. dollar roll over. So we are seeing some definite changes in momentum in the election campaign, and that's starting to translate into changes in momentum in the market.